Hey guys, it's Sasha. Palantir have just released their Q3 results and they were a mixed bag on the surface, but they were really not good at all if you dug a bit deeper. Palantir's share price has just tanked another 10% as I'm recording this video, down to $7.10. And the stock has been absolutely smashed in recent months, especially after each of the earnings calls. In this video, I am going to break down the results for you. I will share the good, the bad, and the ugly from the earnings call. And yes, there were some good things in the earnings call, but we did have Alex Karp banging the table. We did have the earnings call that abruptly ended before anyone on the phone could actually ask a question. We did have a stupid sales pitch, and there were some big red flags in the numbers too. So let's start with the high level performance. Palantir made $477.9 million of revenue in Q3, which was marginally better than the $474 to $475 million that they forecasted back in August. And this Q3 revenue grew 22% year over year. The only other forecast that they made 3 months ago other than revenue was on the adjusted income from operations, and the forecast here was for $54 to $55 million, and the number came in at $81 million, much better than expected. They highlighted this, and so on the surface, Palantir looked like maybe they had a small beat. And even better, the beat on the adjusted income from operations wasn't even because of share-based compensation, not entirely. You can see that pretty much the only difference between the actual operating loss of $62 million and the positive adjusted operational income is in stock-based compensation. But Palantir's share price has tanked in Q3 and was on average substantially lower than in Q2 or at any point since Palantir went public. So the stock the company has been dishing out is worth less in dollars than it would have been when the share price was higher. So if the share price didn't tank as much as it has done, and the share price was higher today, the value of the stock-based compensation would have been higher. And this is kind of where the problems start, because it's easy to look at this table and say, look, stock-based compensation is finally dropping, it's coming down. It's only $140 million this quarter compared to $185 million in the same quarter last year. But look at the Palantir share price in Q3. It was hovering around $10 in July, and then Palantir had a bad Q2 earnings call, and the share price fell to around $8 for the next 2 months. In July last year, Palantir shares were at around $22, more than twice what they were in July this year. In August and September last year, they went up to more like $26 on average, and as high as $28 to $29 at the end of September. That's 3 to 3.5 times the share price in August and September this year. And here is how stock-based compensation works. I'm going to simplify it massively, so please excuse me, but roughly speaking, employees get given options, and these options have a grant date and they have an exercise date. So if the vesting period, for example, is 2 years, the gap between those two, you go and divide the cost of the shares being given to employees by 8 quarters and charge that down in each quarter as stock-based compensation. So as the share price has been falling over the last few quarters, the value of stock-based compensation dished out in each of those quarters has also been dropping in terms of the paper cost to the company in dollars. Stock dished out in September this year is costing Palantir more than 3 times less than the same stock dished out a year ago. You can see in the cash flow statement that the revenue from the exercise of options was $72 million in Q3, a huge drop on the same quarter last year. And remember that when employees exercise options, they can only exercise them at the original price on the grant date. So the management of the company has been there for forever, about 17 years. They have given themselves very favorable stock options some time ago, and they are cashing in. But none of the employees that Palantir has hired in the last 3 years are exercising themselves, because why would you exercise stock at $25 when you can go and buy it in your brokerage account for $8 instead? Anyway, the reason why Palantir's operating margin is improving is because the operational costs are improving. You can see in the P&L the gross margin actually got slightly worse. It was 77.9% a year ago, and it is now 77.5%. And the sales and marketing costs have also gone up from $153 to $183 million. That's about 19.2%, roughly the same as the rate at which the revenue has gone up. But the next two costs, R&D and the general and admin costs, are where the money has been saved. R&D only went up 6.9% and general costs fell by 0.6%, so it kind of looks good. But A lion's share of that benefit here is coming from the stock-based compensation falling. So the operating margin is largely looking better just because the share price for Palantir has tanked. Palantir did have a big win buried in the presentation. I'm not sure why they didn't make more of this win. It wasn't even in the top 7 highlights in their presentation, but the outstanding deal value for Palantir has grown from $3.5 billion last quarter to $4.1 billion this quarter, which is a very big jump in just 3 months. That number has been flat for the past 5 quarters, and this is the value of the future pipeline of work for Palantir, so it is kind of like a big deal. In the Q3 shareholder letter, Alex Karp wrote that Palantir executed contracts in the 3rd quarter of this year worth a total of $1.3 billion over time, with $987 million of the $1.3 billion coming from contracts entered into with the United States government alone. And that kind of sounds great. It's a really big number. You can see this is the biggest number in terms of sales that Palantir has done in the last 3 years, but this is a really big but. Here's the maths. Palantir sold $1.252 billion of new contracts in Q3. Palantir also earned $478 million in revenue, and revenue comes out of the future deal flow, and the outstanding deal value went up from $3.5 to $4.1 billion. And that means that unless there's major rounding errors on this $4.1 billion number that are strongly in Palantir's favor, we only get 2 decimal points here, they lost $174 million worth of deals in the pipeline in the last quarter as well. So it's important to remember that the deals in the pipeline are not guaranteed. And we're seeing a pretty reasonable chunk drop out in the last quarter, along with the record-breaking sales. It's just the record-breaking sales are masking the fact that those 174 million dropped out. But here is the kicker. You've just had a record sales quarter. You have added 33 more customers, 11% up quarter on quarter. The number of deals closed is up 63% year on year. And your remaining performance obligations grew 43% year on year. So the contracts that you're actively working have $1.3 billion left to run, and Palantir will be collecting that money. But given all that, Palantir's guidance for Q4 is $503 to $505 million, which is 16.7% up year on year. So what's going on? All the numbers are looking good, but the revenue growth just keeps on falling. You're telling me that you just signed a huge number of new deals. Your revenues per customer are increasing, but you're forecasting the growth rate next quarter to slow down significantly. Well, most people won't even clock that the rate of growth is slowing down because Palantir have stopped printing it. You have to actually go and find what the Q4 revenue was last year and do the numbers yourself. And in case you're wondering why Palantir have stopped reporting year-on-year growth numbers in the presentation for anything other than stuff they legally have to report, it's because they look like this. Up until last quarter, Alex Karp has said that Palantir will definitely continue growing at 30% year on year. Last quarter, they deleted that from the written statements, but Alex still said it verbally. This quarter, Alex didn't mention it at all. I'm guessing some legal people had a bit of a word with him because it wasn't mentioned, it wasn't printed. It was 31% in terms of growth in Q1 this year, down to 26% in Q2, 22% this quarter in Q3, and Palantir's own projection is for it to be less than 17% in Q4. And then you scratch your head and you look at the outstanding deal value numbers again. Remember, all future revenues come from the outstanding deal value bucket, and that bucket has only grown by 14% year on year from 3.6 to 4.1 billion. And the big question is, does the growth in the last quarter, the huge sales spike, mean that Palantir has turned a corner? Are we about to go on a massive sales spree? Is it all about to explode? Well, Alex Karp said that 987 million out of the 1.25 billion came from the US government contracts. And that is likely to be a cyclical thing. The US government spend on Palantir is not going to increase by 17% every quarter because government spending has its limits. While the total deal value went up a lot, the remaining performance obligations did not. They only went up by $100 million. It was $1.2 billion last quarter, and it's now $1.3 billion this quarter. This means that a giant chunk of the deals that are appearing in the signed pile in Q3 are very long-term, not part of the current deliverables or immediate deliverables, and can be cancelled. US revenue for Palantir grew by 31%, but the overall revenue only grew by 22%. And if you do the maths, that means that non-US revenue only grew by 7% year on year. So revenue outside the United States is under serious pressure. For a company that is valued entirely on future growth, that is a problem because in the US, Palantir is already relatively saturated, especially within the government sector. According to Palantir, this is because European countries are backward and stupid, of course. It has been our experience, however, that some countries, particularly in continental Europe, including Germany, have fallen behind the United States in their willingness and ability to implement enterprise software systems that challenge existing habits and modes of operation. There have been repeated attempts to build replicas of Silicon Valley in continental Europe, in Germany and elsewhere, and the results have been decidedly mixed. So clearly, Palantir is extremely bitter that they're not selling well in Europe, and especially in Germany, and their attempt to improve the situation is to tell their potential European clients that they suck and that they are backward. Sounds like an absolute winner of a sales tactic. The bitterness in this could not be more awkward. You can go and read the rest of this ridiculous letter on the Palantir website. It is very long and full of Alex Karp just saying that clearly Palantir is the best, everyone else is an idiot, Palantir has no competition, and this is exactly the same message they conveyed on the earnings call in two separate rants. The earnings call itself was pretty boring and lackluster actually, mostly. A big part of it was just an actual Palantir commercial. I am not even joking. They ran a commercial for Palantir on the earnings call instead of talking about the earnings for the first bit of it. The questions that did come through were quite generic, completely pointless, so we didn't really get anything useful at all from them, but then this happened.
Alex, we had a lot of individual investors on the line who submitted questions. Is there anything you'd like to say before we end the call?
The operator said there were a lot of people waiting with questions on the phone. Does Alex want to say something? And say something he did.
You know, we built this company for really tough times. The times are tough and they're going to get worse. We feel that Palantir, we know Palantir shines, whether it's in the anti-terror context, the war context, the COVID context, or the US commercial context, when times are bad.
And I am guessing that there was a legal person somewhere out of shot in the room. All of the people were looking at one particular corner of the room throughout the Alex rant.
Just a slightly different augmentation of what Shyam is saying. Maybe a different riff that like underscores, you know, the success of people using our product is people think these products are easy to build.
And I am guessing there was a legal person sitting somewhere out of shot in that room that they were all looking at who was busy telling them that they need to cut the earnings call right now before Alex Karp really goes batshit crazy, because he already did some table banging earlier in the call. He was visibly angry and he began going on tangents about how everything that's bad in the world is great news for Palantir once again. So Palantir ended the call without taking any of those questions on the phone. And that pretty much sums up what happened on the earnings call. It was kind of like a mixed bag, but with some really big red warning flags. Some potential green shoots, sure, but the big load of sales don't look like they're converting into actually increasing revenue anytime soon, and most appear to be in the form of long-term government contracts that won't help the bottom line for some time. Palantir continue to show the most positive numbers they've got to show, but even those are starting to fall. US commercial revenue was growing at well over 100% year on year for the last several quarters, and that has now more than halved. So even the fastest growing parts of the business are clearly beginning to slow down as well, but there is no recognition at all of this on the earnings calls. The overall direction in terms of growth is looking less and less promising, and the management still don't seem to want to acknowledge any of the issues the company is facing. They are showing massive disdain for their investors. This is the second earnings call in a row where the call ended abruptly early, and this time they only took 2 investor questions and none of the questions from the people waiting on the phone. Alex Karp looked visibly irate at having to even be there, and given that Palantir shares are structured in a way where he, along with the management team, have absolute control and the shareholders can't do jack about it, I personally would not be very happy with this if I was a Palantir shareholder. If you found this video useful, please don't forget to smash the like button for the YouTube algorithm. Thank you so much for watching, I really appreciate it, and as always, I'll see you guys later.